Shiller, you talk about the democratization and the humanization of finance. Can you elaborate on that?
Well, finance should be for the people. People are what matters. Corporations don't matter, and I think there's been a long trend in U.S. and international history toward making finance more accessible to the people. And I think that that's a trend that we ought to reaffirm now in response to the financial crisis. Make finance serve the people.
In what ways would you do that?
Well, there's a lot of things that have to happen. One of them is already in Dodd-Frank. The Consumer Financial Protection Bureau is a organization that helps protect individuals against manipulative tactics from the financial community. But I think it goes way beyond that. I think that we should rethink how people get their information, facilitate getting information better, think about how people manage their risks, the risks that affect individuals, their risks to their homes, to their health and their businesses and their careers, and all these things are amenable to better financial products that serve people's needs better.
You're also calling for housing finance reform. Can you talk about that a bit?
I think that housing finance has really not been optimal lately, and that to a substantial extent the financial crisis we're now in is because of inappropriate methods for managing real estate risk. I think that we have to rethink our mortgage institutions. This has not been talked about in response to the crisis, but it ought to be the fundamental thing in response to the crisis. People took these leveraged, undiversified investments in homes with their entire life savings. And that's a risky thing to do, and we've just seen the outcome of that. So I think it's time to rethink the very fundamentals of mortgage institutions.
What are your biggest worries over the next year or so when it comes to the economy?
I'm worried about a double dip, either in the aggregate economy or in the housing market, or both. That ultimately these things rely on people's confidence, and the confidence is kind of iffy right now. And we have emerged from the biggest bubbles since the Great Depression in both housing and in stocks, and it puts us, and in addition with a lot of uncertainty about financial regulation, it puts us in kind of an uncertain situation. I don't know that it will turn out badly, and I don't imagine that it will be catastrophic, but I'm worried that it won't be stellar performance in the coming year or more.
So in the short term, key things that should be worked on?
Well, the immediate thing that we need to do is to get Dodd-Frank in order and done. We're having a slow response. Dodd-Frank was the act that Congress passed last summer, was a useful advance. That's the first thing to do. But I think that we then have to move on from there and go into even further reforms.